Now let's talk Yahoo U, Nikola, DraftKings. These are the big name examples of companies that have raised money through a SPAC. But what is a SPAC? How does it work? Why is it all of a sudden so popular? Virgin Galactic, I think, is another one. Yahoo Finance's Brian Cheung is here to explain. Brian.
Well, Julie, SPACs are also called blank check companies. The idea is that you give me a bunch of money and I can go out into the market and spend it on whatever company that I like. Now, SPACs have been around for a while. It's not new, but with the stock market on a tear and companies valuing a certainty when they're raising capital, they've become especially popular right now. But what exactly is it and how does it work? Well, I'll walk you through it with some slides here, and I want to show you, I want to illustrate this through an example, right? So let's say I am a company, I am CHEUNG'S, I sell sneakers, and I want to go public, right? So let's put the SPAC idea on the side. This is just a regular IPO. And I have to go through this process where I have to first find an underwriter. So I'm going to go find an investment bank, and then what I'm going to do is I'm going to go on the roadshow. I'm going to talk to all these investors like Adam, like Julie, and I'll say, hey, invest in my company. I'll do this spiel with 900 investors all over the country, and the underwriter is going to help me figure out the pricing based on the demand, and then I'll sell the shares and I'll pocket the new capital. But this is a long process, right? Pitching my company over and over and over again to all these randos who don't know me or my business model. So think about this. What if I could raise the money and only do it with one shop, just one place where I can get certainty that my stock is going to sell for a certain amount? But who would it be? Let's hold on to that thought for a second. I want to introduce you now to AKIKO Fujita. Sorry for picking on you, AKIKO. She's an accomplished financier. Okay, so she's been at some of the best private equity firms and investment banks out there. She was a partner at a massive PE firm, 900 quintillion bajillion dollars. She made $9 kajillion dollars in fees as the head of M&A at Bankers Banking Co. She's got so much experience in buying companies, merging companies, running companies. In fact, people are just coming up to AKIKO and saying, I trust you to use my money to snatch up any company because you're that good at managing. But AKIKO is so confident that she's going to do something even better. She's going to start up her own blank check company. So enter the SPAC, Special Purpose Acquisition Company. She's going to incorporate her own company and file her own S1 statement to go public. So let's call it the AKIKO Special Acquisition Retail Business Thing Corp. Okay. Now, oftentimes the SPACs will have some broad target industry that the SPAC principals or the showrunners here have deep experience in. So in this case, let's say AKIKO is really specialized in retail businesses. So this is a retail SPAC. Now, AKIKO still has to go through all the regular IPO hoops like any other company to raise capital, but it doesn't have any business yet. So AKIKO's pitch is, I'm freaking AKIKO Fujita, give me some money. You know that you can trust me to make some good business dealings here. And it works pretty well. So let's say, for example, this happens. She raises $400 million in an IPO. She's got a lot of good followers that trust her managing abilities here. She's going to take that money and then go on the hunt. So she finds me, CHEUNG'S, and she finds out that I'm looking for $3 billion valuation. I want to raise some capital here. Now, AKIKO can't buy me with the money that she singularly made in the IPO. So step 3 is going to be she's going to go find additional financing elsewhere, maybe a private placement with another investment firm or financing it through the issuance of debt. But regardless, she's going to have to whip together that money. And if she does, she's going to give me a price and say, I'm going to buy your company for this amount per share at a valuation of this. And if I like it, I'll say, all right, done deal. And then step 5, the switcheroo. The SPAC, which was publicly listed as AKIKO's company, then becomes CHEUNG'S, which is now a publicly listed company. Now, SPACs are raising more and more money. Consider that year to date this year, SPACs have raised $12.5 billion. That's more than the entirety of 2019. In fact, 2019 year to date around this time in July, it was about half of what we're seeing right now. And this number is only going to get bigger because you may have heard that Bill Ackman of Pershing Square is set to open up his own SPAC, which could hit a record for the offering in one SPAC. It could be up to $4 billion. Now, why in 2020? Why are we seeing these record numbers in 2020 if there's so much market volatility? Well, it's exactly that, right? I mean, companies don't want to hit the roadshow knowing that the capital that they raise could be different on a Monday relative to a Tuesday. So why not just let the SPACs raise the money and then partner with one entity and get your money, right? So this is the idea behind the SPAC. And one thing I do want to point out lastly is that a company that usually partners with a SPAC will often sell for a lower price than if they did the IPO themselves. That's the trade-off. If you're not doing the work of going on the roadshow, you're probably going to have to sell your company for a little less to a SPAC. But again, worth watching here, although I do want to say AKIKO is not currently in discussions with CHEUNG'S to buy the company, although we are exploring all of our management alternatives at the time being. Julie?
I don't know, Brian, you're giving me some ideas here. I like the fact that in this hypothetical, I have made cajillions of dollars in fees, which is way more than I've made over the last, in my lifetime. But my question to you is, what exactly is the risk to investors? Because if they are investing on this side, it's not sort of your standard vetting of a company, right? What would you say is the biggest risk to investors who are looking to invest in SPACs?
Well, the risk to an investor in a SPAC, if you're talking about on the secondary market, right? If you're buying a share of a SPAC that's publicly listed, but they haven't made an announcement yet, it's the announcement decision, right? You don't know if a SPAC is going to buy a good company or a bad company. And that's obviously also subjective. If you're an investor and you bought a SPAC and you said, I really like this management style, I like the person that I'm investing in here, and then they go out and buy something out of left field, well, it's too late. You can't necessarily do anything about that because you did buy that blank check, shares of that blank check company on the premise that you were okay with whatever they were going to do. So there is that downside risk, but I do want to note that there's a lot of financial engineering that I didn't necessarily get into. There are things like warrants that are really essential parts of the IPOs for these SPAC companies. And also there's another kind of nuance where it could be units versus shares that a SPAC will offer in a public offering. But regardless, the idea here is that you are ultimately investing in a company. You just might not know what it is. So it's almost like playing the lottery here. But again, if you're betting on a horse that you know has a good track record, the idea is that hopefully they'll be able to take any company and then turn it around as well. So I think that's the idea there, but you may make a great point. There's always risk when investing in these types of vehicles.
And I don't know, the amount of trials and tribulations that CHEUNG'S, the number of times it's gone public through Yahoo, I'm not convinced, AKIKO, that it's a good bet. We'll see about that. All right, thanks so much, guys.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.